Hey now, I'm back with a phenomenal trading system that not only has a high win rate, but produced an amazing gain on account over 100 trades. And those who stay to the end will be treated to my popular optimization tips. Just make sure to hit that subscribe button before this video knocks you on your... I call this system the Trend Cycle 2. And like most trading systems, it can be adapted to Forex, crypto, options, stocks, indices, or any instrument that has significant volume and market participants. This trading strategy utilizes 5 free TradingView indicators. As always, links and settings to all indicators are listed in the description. The first indicator are the Fibonacci candles. I'm going to keep the style at default. Fibonacci candles are calculated differently than standard Japanese candlesticks. Due to the nature of these candles, we are going to use the Fibonacci candles to determine a valid setup, but execute on the standard Japanese candlestick chart for more accurate results. The second free TradingView indicator is the standard moving average. The length will be set to 50 and colored in white. The SMA will assist with providing the current trend direction. The third study is the exponential moving average, or EMA. The length will be set to 25 and colored in orange. The 25 EMA will work with the 50 SMA to determine overall trend direction. The third study is the stochastic RSI. Inputs and style will be kept at default. The stochastic RSI oscillator will provide a precondition for entry. The third study are standard Bollinger Bands. I'm going to keep the inputs at default, but remove the basis line. The Bollinger Bands will assist in providing a precondition for entry. Let's go over entry criteria and review some examples. As always, system rules and details are listed in the description below. This chart is the Euro versus the US dollar 4-hour Fibonacci candles on the top chart and 4-hour Japanese candlesticks on the bottom chart. The rules to enter along on the Trend Cycle 2 are: first, the 25 exponential moving average in orange is over the 50 simple moving average in white. Second, price retraces into the bottom Bollinger Band in blue. Third, price no longer touches the bottom Bollinger Band and is considered disengaged. Fourth, the stochastic RSI moves under the 20 level and then starts to point up. Fifth, there is a green Fibonacci candle that closes. Our rules are met on this candle. That is our trigger. Because the close of the Fibonacci candle may not be the actual price, we are going to use the standard Japanese candlestick chart to place our entry level. The stop is placed at the previous swing low and the target is dynamic. The trade is booked on the close of the first red Fibonacci candle, and the example closes with a very nice 3.91 risk to reward. If you enjoy this content, make sure to click that like button. I have one more long example. The EMA in orange is over the SMA in white. Then we can see a retracement into the bottom Bollinger Band. Third, price disengages and no longer touches the bottom Bollinger Band. The next thing we need to see is the stochastic RSI move below the 20 line and then start to point up. And finally, we see a green Fibonacci candle close. Everything converges on this candle and it serves as our trigger. Remember to use the standard candlestick chart for our entry. You can see how much of a difference there is between the two prices. The stop is placed at the previous swing low and the target is dynamic. The trade is booked on the close of the red Fibonacci candle, and this example yields a profit of 2 to 1. Now we flip to shorts. This is what I would test for shorts. First, the 25 exponential moving average in orange is below the 50 simple moving average in white. Second, price retraces into the top Bollinger Band in blue. Third, price no longer touches the top Bollinger Band. Fourth, the stochastic RSI moves above the 20 level and then starts to point down. Finally, a red Fibonacci candle closes. Everything converges on this candle. That is our trigger. The trade is entered using the standard Japanese candlestick chart, placing the stop above the previous swing high. The trade is booked on the close of the first green Fibonacci candle, and in this example, the profit is a great 4.41 risk versus reward. I'm going to show you one more quick short example. The EMA in orange is under the SMA in white. Price retraces into the top Bollinger Band. Price then disengages from the Bollinger Band. The stochastic RSI moves into the overbought territory and then starts to slope downward. Finally, a red Fibonacci candle closes. That is our trigger candle. The stop is placed at the previous swing high and the target is dynamic. The position is closed on the first green Fibonacci candle with a profit of 2.31 times risk. I'm going to give you some great ideas on how we can improve this system along with a trader's landing score. And now it's time to do what I do. If you enjoy this content, hit the like button. Remember, this is just 100 tests on one instrument. If you are thinking of using this system, please do extensive back and forward testing and be sure to let our community know what you discover. So let me just start out by saying I am shocked by these results, and I will explain why in a moment. This test was done on the euro versus the US dollar 4-hour candles. It took about 4.5 years to find the 100 setups. There was an astounding 17 consecutive winners in a row, paired with only 2 losing trades. The win rate was 80% with only a 2% drawdown, with maybe the best profit factor I have tested so far at 5. Risking 2% per position, the gain on the account was an astounding 161% gross. The thing that is so shocking is the win rate to gain on account. It is atypical for such a high winning percentage to be accompanied by this type of profit. Certainly, more testing is needed, but there is a lot of promise here. The equity curve does not shed any new light into this data alone, but if we look at all of these trades on the daily time frame, you can see this entire test was done during a giant consolidation period. Is this a good system for consolidating instruments? I give this system a trader's landing score of 9 because it has a high win rate, a fantastic profit factor, and a wonderful gain on account. Remember, the enemy of great is good. I have 6 ideas on how we can improve this system. First, the concept for this system was given to me by a community member and is from a ForexFactory thread where Wicked Daddy shares his method for entry. I created a complete trading system based on this, but it could be a good resource to learn more about this particular strategy. The link is in the description. Second, you can use market structure in the form of a trend line as an overall filter. Typically, price will react more violently off of these levels, and you can expect each setup to yield more profit. Furthermore, when you have such a high win rate, the best way to optimize is examining how to maximize your gains on each setup. So ideas for that are using a trailing stop loss, change the profit target to be fixed, or even an opposite super trend signal. This is just a start. I can probably rattle off about 15 ideas that should be tested, but the right exit method can significantly increase those gains. Furthermore, and building on the last point, by adding the 200 EMA on the chart and trading with it, you can use a less sensitive exit method in an attempt to stay in the trade longer. In addition, you can use volume to understand the strength of a particular move. You can see here a classic pattern of decreasing volume during the pullback and increasing volume when the trend continues. Another optimization tip that I am actually testing is getting rid of the stochastic RSI, which I found was not that helpful in filtering trades, and replacing it with the Fu Manchu swing free. You can see the simple buy indicator here on this uptrend yields awesome profits. You can also use this indicator as a trade exit. Be sure to use the link in the description and join the Traders Landing community where I am interacting with traders every day, answering questions and discussing all topics related to what we do. And have a great day because you deserve it.